Previously, we learned in detail about the concept of composition scheme and its features, under which a threshold limit for aggregate turnover of 75 lakh is prescribed. In order to determine whether any person is eligible to apply for registration under the scheme, one will have to check if they're included in the limits prescribed under the Act. For that, computation of aggregate turnover is very crucial, as it's not just the income generated from one single product or one single business unit. Therefore, we can say that a clear understanding of the concept of aggregate turnover as it's defined under the CGST Act of 2017 is very important. Subsection 6 of Section 2 of the Act states that aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis, except supplies, exports of goods or services, or both, and interstate supplies of persons having the same permanent account number to be computed on all India basis, but excludes central tax, state tax, union territory tax, integrated tax, and cess. We should discuss each element of this definition separately to gain a clear understanding of what aggregate turnover is. Firstly, let's cover the part which specifies which goods and services are included. The definition states that value of all the goods and services is to be included whether they are 1. Taxable, 2. Exempted, 3. Exports, which 1 are 0 rated, and 4. Interstate supplies. When we say taxable supplies, it will exclude value of inward supplies on which tax is payable by a person on reverse charge basis. It's very important to understand that not all inward supplies are excluded, only the ones on which the recipient is required to pay reverse charge are to be excluded. The reason behind their exclusion is that they contribute to the income of the person supplying it and the recipient who is only liable to pay taxes on it. Second most important point is that value of all the supplies made by a person having same PAN number are to be summed up while computing aggregate turnover. This means that if more than one registration are made under GST with the same PAN, then turnover of all such businesses will be summed up for computing this threshold. This computation is made on all India basis, and there are no segregations in threshold limits for normal and special states, as is the case with GST registration thresholds. This means that supplies made all over India are included. After discussing the positive list, i.e., what is included while computing aggregate turnover, let's discuss what's to be excluded. This list is pretty simple, as all the central, state, and union territory taxes and cess are not to be included while computation. With this, we have covered all the concepts related to aggregate turnover. Anyone who wants to register under the scheme must compute their aggregate turnover based on the above mentioned set of rules, and if the amount is less than or equal to 75 lakh rupees, then they can register under the GST composition scheme.